right, Forex market, guys, we're back. Second analysis of the day. Another old position we have in place. This is the pound Swiss franc. We got in here quite a while ago. That was 16th of September, right? We wanted to see price break in 1720. That was our official trigger. According to the big picture, we got a lot of potential on the way up, all the way to 2255, which is the previous major high, right? Was determined back at the beginning of June. Anyway, that's beside the story. We got in when price broke that 1720, but it didn't really break that level. It actually crushed that level. And when it did that, we got in. That was actually, you see these two trades, right? This was the first one. There wasn't the second one. It looks like it was the second one, but that was actually the first one. And then we doubled down on the way when price was kind of deeping and starting to turn back up. But when price, exploded here, we felt that there's room for technical correction. We knew that. We were fully prepared for that. And we were, we just wanted to absorb that move and hopefully to double down. And that's exactly what happened. Price went down. We knew 117.20 is going to be a tough support, and we can rely on that. Even though it dipped below from the daily perspective, I want to show you how that ended up from the weekly perspective, because it gave a lot of respect to that level. There you go. Here's that spike here. It couldn't really break through 117.20 from above. And when it spiked that level, we doubled down, right? We fired up one more trade. Now it looks pretty good, right? Now we're full in profit here. It looks starting to look nice. But I wanted to give you an update on what's to come, because here's the evidence we have collected so far. We're not very impressed with the fact that price looks like it's drilling through 1842. We're not sure that that's the case. I mean, hopefully it is, but we gotta be cautious here. Why? Well, because price didn't finish the job. I mean, last Friday, you can see the reaction we had here, right? Don't forget, that was the weekly closing bar as well. Let me show you how it looks like from the weekly perspective. We're talking about 118.42, let's say, right? You can see what happened. Price engaged. It spiked that level a little bit because the highest high was 1859. So, and it failed to break through, which means there's a stiff resistance here. There could be a much more significant downside correction at this point, right? So instead of, increasing the position even further, rewarding this breakout, because it's not a, officially it's not a breakout yet, right? Because we're still early stages of the day. Even if the daily, even if there's gonna be a daily breakout here, it's still unconfirmed, so to speak. We needed that weekly confirmation. We didn't get it. So now that puts the whole situation in a bit of a shaky place. So here's what we want to do, guys. We want to do the following. First, let's secure some of the profit we've made here. I mean, the big chunk of the profit, the double down trade, that's gonna get out. We're gonna close that out. We're gonna get out of one of the trades. So basically, we're closing out 50% of the position, right? So that's quite significant. However, if price will make it by the end of the day today and close above 1841, that's going to be great. We're simply going to re-enter that trade, right? We're taking profit, and then we're basically going to shoot that trade right back in. All right, and then of course we'll continue to follow up as usual. I mean, as long as price keeps pushing forward, we'll just keep increasing the position. But we'll be careful because we don't have that weekly confirmation. And only once we have that weekly confirmation, hopefully by the end of the week, then of course we can get more aggressive on the way up. Like I said, aiming at 2255, that's final destination. But hey, the primary target is actually 2093. All right, that's the primary target. Here we would like to get most of the position out, if not all of it, if we'll see some signs of fatigue where price can't drill through that level. All right. If it does, we'll just continue to the next and last one in 2255, like I said. Price stop loss level 1650 still reflect that dip we had when we doubled down when price came up. I think it's time to adjust the stop loss level. not by a big distance. We're going to push 50 pip here to 117 and close out, like I said, one of the trades, the lower one, taking some nice profit on the way out. All right, so that's the story, guys, for the situation here with the pound Swiss. Definitely interesting. We'll be back shortly to follow up on the situation here, that's for sure. That's about that for today. Forex market, guys. We'll be back tomorrow to follow up. See you then. Take care.